Hello and welcome to Kitco Mining's Digging Deep, sponsored by Revival Gold with me, Paul Harris, in which we discuss the week's most meaningful mining and exploration news. Joining me today is Nicole Adshead-Bell, Principal of Cupel Advisory. Nicole, welcome back to Kitco.
Thank you very much for having me. It's been a busy 10 days of conferences.
It certainly has. We hope you like what you see, so please hit that subscribe button. But please note that Digging Deep is not investment advice, and the opinions expressed here today, particularly today, are our own and not Kitco's. Nicole, we are at the 2024 Gold Forum Americas in Colorado Springs. This is the meeting, the conference where all the big gold companies come out to play and all the big gold investors come out to play as well. You gave a presentation about investing in resource stocks here. What are some of the highlights of your presentation?
How long do you have, Paul? I really was focused on the fact that every commodity is cyclical and where you are in the cycle should dictate your investing behavior. And that if you acknowledge that investors and corporates tend to have the same behavior depending on where you are in the cycle, that increases your chances of success in investing in the sector. So I focused on that and talked a little about where I think we are in the gold market. And then I spoke a little bit about just some of the larger companies in our sector that are really focused on gold and some messaging I want to be a gold company when I grow up versus highlighting their core commodity, which is gold. And my takeaway, and it's not just mine, it's many gold investors, is if you cannot sell your primary commodity, how on earth do we expect to attract new investors to the sector? And then at the end, I touched on some of the issues that we face with the proxy advisors, with ISS and Glass Lewis, where investors are essentially outsourcing their vote, and we're in an election year in the States, and I don't think any individual who's voting in the States would outsource their vote.
Okay, a couple of things to follow up on there. One of the talking points I've had, well, a couple, mainly at the Precious Metals Summit last week. It came to me independently, I've never heard it before. It came up in a few conversations, and it was this, just how bad a lot of the issuers are at marketing. And I want to make the distinction between promotion and marketing. Right. And this came up, the first person to tell me this was a fund manager. She'd brought her marketing expert with her because she wanted her marketing expert's opinion of how well the companies were presenting to her that she was having meetings with. The thesis being, if they're poor at getting their message across, they're probably not a good investment because that's potentially going to limit their share price appreciation if they're not able to engage and resonate with investors. And this snowballed. I heard several times. Most CEOs do not appear to be happy delivering their story. They don't seem to be energized and enthusiastic. And if they're not enthusiastic, how are they going to create energy in someone to write them a check and say, wow, I must invest in that?
Absolutely agree. It's not just endemic with messaging your story. We as an industry, not just in the gold sector, but in the global industry, are terrible at messaging what it is that we do in a positive light. In fact, I would say our biggest challenge is one of reputation. I just sat in the presentations of all the majors because it's interesting to see how they message. A number of them, these are CEOs of some of the largest gold companies in the world, they read their speeches. So think about that. You are a CEO and you cannot tell your story without having a speech prompt in front of you. And when you read a speech, it's very, very difficult to engender a sense of enthusiasm and a naturalness, and people respond to authenticity. And then sitting in meetings, I did the maths one day. I think I've sat in over 13,000 meetings over the last 27 years of working in the sector, and particularly when I was on the buy side and got all the fake love on the buy side, and how many companies are incredibly poor at telling the story. And so absolutely concur. So if you cannot tell a story that resonates with the person on the other side of the table, and you're competing with literally thousands of other listed companies in the sector, and then if you can't present well, so if you can't message why you want to own the stock, why you want to be exposed to the commodity, I think that might explain some of the lack of enthusiasm that we've seen for the generalists with our space.
Well, I think 13,000 meetings, you need something a bit stronger than what we've got here. But also, in addition to competing with thousands of companies in the space, you're also competing with every other investment company out there. Exactly. or opportunity out there.
Well, and when you look around, and I did touch on this in my presentation yesterday on communication, there was a very interesting graphic that showed the breakdown of how each generation communicates in terms of their social media preference. And so, for example, many companies, including the World Gold Council, which is arguably the biggest advocate for the sector, so when you go and look at their subscribe now buttons, they do not have TikTok or Instagram, which are the two biggest platforms of choice for the 18 to the 39-year-old set. So just think about that for a second. We're not even tapping into pretty much half of the age group that could potentially be interested in our sector. I think there's a very easy, cheap solution for this. Number one, hire some young people who understand how to communicate effectively. So hire a bunch of millennials. And also, we're in this unique time where you can connect directly with the public through all of these platforms. Why are we not taking advantage of that? And then when you look at the World Gold Council, and again, not that I'm going to pick on them, but I am, the way that they message, like doing a movie with Idris Elba. I mean, I'm sure it's pretty nice to have Idris Elba in a movie, but I don't think that's an effective mechanism to communicate why you should be exposed to gold and invest in gold equities.
I had a meeting last week with Rick Rule, bumped into him at the Precious Metals Summit, and Rick has done a number of investor boot camps in which he creates content for retail investors to better understand the sector, ask better questions of CEOs and things of that nature. And I suggested to him, Rick, why don't you do one of these for CEOs, for the issuers on how to market? And he's like, boy, that's a brilliant idea. Why has nobody ever thought of this before?
No, people have thought of it before, but it's very difficult to say to a CEO, you're pretty crap telling the message. And so I would be an advocate of, there's communication groups out there that are very, very effective and very effective at ensuring that you leverage off the way that you naturally communicate. I think it would behoove a lot of boards to actually insist that their senior executive team that is dealing with the public, that they have communication training. No matter how good you are, we all can improve. And I point to Robert Friedland as a standout, and Rick Rule. Both are absolutely superb communicators, and they're very good at connecting with whether it's institutions or retail. And I think a lot of CEOs could learn from that.
Well, for media training, you can write to paul.corresponsal@gmail.com. That's something I can help you with. Now, we're here at the Gold Forum. What are your impressions of the mood here? Gold has hit record price last week of $2,600 per ounce. I believe I've seen some smiling faces.
Yes, I think there's some bifurcation. I heard a very good description at the PMS conference last week, which was we're in a stealth bull market. And I think that describes the situation perfectly. We have gold at near record highs, and yet there's not the equity performance that one would expect when we've seen this very nice performance in the underlying gold price. So we haven't got the marginal investor here. Capital is not available in a very plentiful way for the junior sector or the developers. But for the first time, I'm seeing generalists at this conference, and I'm getting incoming calls from generalists who are starting to look at the sector. So I think we're not at the very the earliest stages of a bull market. I think that there's been easy wins. We've seen some exceptional performance in some select groups, particularly the producers that are generating a lot of cash on the balance sheet. But the juniors are still not getting love, and neither are the developers. And normally as a cycle matures and you start seeing new money, capital flows drive share prices, and then you start seeing more M&A. And I think we saw with Goldfields acquiring the remaining 50% of a Cisco, that's a higher risk M&A. That's not acquiring a producer. And so theoretically, all companies are looking at all companies all the time with M&A, and investors are starting to look for and pay for growth. And when that happens, and when they're communicating that to the corporates, then you start to see M&A, and then FOMO occurs, and everybody gets scared that they're going to miss out on the next big deal, and you start to see a feeding frenzy in M&A. So I think there's this very interesting time for the developers.
Now, when you look at the sort of gold stock share prices, a number of companies are up between 50 and 100% year to date.
That's right.
We are going into a higher gold price environment. Costs are starting to come off. So margin growth, free cash flow growth. The setup seems to be really good for share price growth to continue.
That's right.
And is that what it will take to entice the generalist investors back to the sector?
Yes, I think that they will have to be exposed. There's this interesting element going on at the moment just in terms of obviously fiat currencies and inflation, what does this mean, and gold as what has always been a store of value. But we're in this perfect environment where inflation is stabilised, if not going slightly down. You've had this incredible increase in the gold price, and we've had only 1 quarter of true exposure to that. And so I think after the next quarter, when all of these gold companies engendering true margin expansion in a rising gold price environment, the generalists will be forced to take a look and retail. And so I think you're in this very interesting time. And stepping back, if we look at relative price performance from the last peak in 2011, I think out of the majors, only Agnico is trading at a higher share price. Both Barrick and Newmont are down. So if we kind of step back, yes, we've had some great performance year to date, but I think there's still there's a lot of move for this sector re-rating to continue.
Now, you mentioned FOMO, fear of missing out. We've seen a couple of transactions recently. AngloGold Ashanti buying Centamin. Centamin's got a really good project, a mine in Egypt. It's got a really good development project in West Africa. You mentioned Goldfields and Osisko mining. Osisko's Windfall project, high grade, has scale. Also recently we saw Kinross Gold put out a PEA, preliminary economic assessment on Great Bear in Ontario. That is a generational discovery as well. So these things, is that going to really stoke the FOMO fire?
Absolutely. Ultimately, it's very hard to step outside of the crowd. And boards and management teams are often like individuals, and sometimes a conversation is as simple as this: XYZ is doing it, so we need to do that too. And I think the early movers generally have the advantage in terms of maybe bottom ticking the highest quality and best potential, but ultimately everybody feels like they have to transact. And when you feel like you have to transact, and we will be heading in that direction, and we saw this last cycle, that's when I would say very value destructive decisions are made, and that's normally the sell signal, and I don't think we're anywhere near that point yet.
Well, some of the people in corporate development teams that I know that I've met here and last week, they seem to be very, very busy. They actually had a sweat on their brow rather than just having casual catch-up meetings. It does seem that they're really, pressing their nose down and looking to start transacting. Yeah,
if you speak to any development company or any company that's going through that, and we're all suffering it if you're involved with a developer, that orphan period Lassonde curve. All of them, and I sat in a number of meetings with Hot Chili, I'm chairman of Hot Chili. There's a very significant proportion of those meetings when you speak to all the junior developers are corporates. And so there's definitely a lot of tire kicking. Let's see when that results in action.
Okay, now this week there hasn't been a great deal of news. It's only Tuesday as we're recording this. I think the biggest news are the 2 releases B2 Gold put out. Firstly, it put out that it's reached an agreement with the government of Mali that's paving the way for the future growth and expansion of Fekola in Mali. And then they put out a cost overrun on Goose. B2 Gold stock is up 25% since those went out. So the market these press releases seem to have removed a market overhang about Mali on B2 Gold, and B2 Gold had been messaging that Goose was going to cost a bit more. So the market seems to have taken that in its stride. What do you make of its communication there?
If you're going to communicate a cost overrun as a company, I think that you want to get all the bad news out at once, because then it gets embedded in the share price. And so if I was them, I would have been conservative in that cost overrun, i.e. I would have added some fat, and so when you deliver, it's either within guidance or maybe hopefully below. So hopefully they've taken that strategic view. I think once you allow people, you've got the bad news out there, you've removed some of the risk. B2 have a history, I think, of executing pretty much the best in the business on M&A. Normally acquiring assets can be value destructive to the acquirer, but everything that they've done up until the acquisition of Sabina has resulted in materially positive outcomes for them. So very, very good build team, very good operating team, very good exploration team. I think Goose, obviously it's a very challenging, great deposit, challenging location, but they're very, very experienced at what they do. So, and they've got growth. which is something that investors are going to start paying for.
Excellent. We have a lot more to come, but first a word from our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Welcome back. Nicole, we're at conferences. We've been at a conference last week, this week. One of the key benefits of being at a conference is catching up with people, chewing the fat, listening to the grapevine, exchanging rumors. I want to run a couple of things past you that I've heard, and let's see what you think about those. Now, I've been asking people if they could, wave their magic wand, put 2 companies, 2 assets together, what would they be? I think 80% of people have said Oko West and Oko, which is G Mining Ventures, G Mining Ventures and G2 Gold Mines.
Right. Yes, makes a huge amount of sense. I'm not a surprise.
Okay. A number of gold producers are apparently interested in buying Victoria Gold's Eagle Mine. I've been hearing that.
Oh, interesting. That's going to see how that plays out. The government is messaging, that the Yukon government that they would like to see the mine opened. Obviously, that mine had a very material impact on the local economy in terms of jobs and then the multiplier effect of that and taxes and royalties, etc. I suppose it depends. There's some First Nation rhetoric that is very against the mine reopening, but a bankruptcy situation, particularly if you've got a good operator, we're in a stronger gold price environment, and if you've got multiple assets, it makes a lot of sense. You can create a lot of value out of buying something out of bankruptcy.
Okay. Now, we've talked about it already, the Osisko Mining being bought by Goldfields. And apparently the Osisko team is lining up Osisko 4 or whatever that will be. So they apparently are looking to come back hard and fast once that transaction closes.
Okay, doesn't surprise me. Yes, when you get rewarded and you've got a reputation for creating value, it's when your ability to raise, your cost of capital is decreased materially. So not surprised. Everyone's addicted to our sector, what can I say?
Okay, let's play a game.
Okay.
I've interviewed 8 of the 10 largest gold companies here.
Right.
And a number of the intermediates and some of the developers. I'm going to read out to you something the CEOs have said to me, and can you guess which company said it?
Okay,
first one. We shelved all investment in Panama. We are not expending any money due to the business conditions.
First Quantum.
Oh, close. Who's the other one it would be?
Barrick? No, not Barrick. Well, Barrick has said that they would, haven't they said that they would look at it if...
But it's not. It's Jason Simpson, Orla Mining.
Oh,
with the Cerro Quema project.
No.
Okay, here's another one. That's market speculation. Some journalists have made it up, as I'm on record saying that I've assured the shareholders that I'm committed to seeing the 2028 commissioning to fruition.
Oh, Barrick.
Well done,
Mark Bristow.
Okay. Next. The market said, oh my God, what have you done? What did you buy?
I don't know.
That was Paul Rollinson of Kinross Gold talking about Great Bear.
Oh, but Great Bear was such a long time ago.
Okay, that's perhaps a little bit.
Yeah, that was a tough one.
Okay, next. Markets always tend to overreact, so it's really gratifying to see that the market has understood the resolution of the issues and we now have certainty going forward. We've talked about it already.
I don't know.
Clive Johnson, B2
Clive
Gold.
Johnson, B2, right. And now I've got performance anxiety.
Okay, this one hopefully will be a little bit easier. Chinchillas are endangered animals. We are firmly of the view that we...
Goldfields.
Well done, Mike Fraser.
I sat in his presentation today, and there was quite a bit of a discussion about chinchillas.
Okay, good. Next, we're always looking for merger and acquisition opportunities, but we're not driven by that. We don't see the risk of single asset as much as maybe the outside investor does, because we live and breathe it.
That must be a single asset company.
Who's the best single asset producer out there?
That's producing today. Lundin Gold.
Brilliant, Ron Hochstein, well done.
Yeah.
We have the capability to build it and to finance it. If there's a better solution out there, combining things, that's to be explored. But I would say yes, at a very high level, it does make sense. Does it make sense to invest in infrastructure at two sites that are so close together? And we've talked about this already.
Goldfields again, talking about the...
Close. A little bit before, a prefix on Goldfields.
Oh, no, Anglo Gold.
G2 Goldfields.
Oh, G2 Goldfields, that's right, okay.
Louis-Pierre Gignac of G.
Right, G Mining Ventures.
Yeah. Over the last 6 or 7 years, we've added about 35 million ounces of discoveries at around $10 an ounce. Anywhere in the world, that's impressive. Who said that?
Paul, you're killing me here.
You've mentioned them already.
Barrick again? No.
Agnico Eagle.
Agnico, right. Oh, I should have said yes. I should have realised that.
The next one's a trick question because it wasn't the CEO. Our divestment process is going well and according to plan. All of the processes are running.
Newmont?
Yes, that was Natasha Filion.
Right.
EVP and COO.
Right.
Okay. It's easy to be a Monday morning quarterback. I think my predecessor did a good job to restructure the balance sheet, and it was essential. It's a good asset. I think they're doing well. Really pleased to see it come into production because we really need that in our industry. This is a tough one.
I don't know.
That was Patrick Goldin of New Gold talking about Blackwater.
Okay, right.
Cool. Well, that's all I've got. You got a good.
I did terribly at that. I hate losing.
I'm surprised you got any, but that wasn't the plan. Cool. Well, thank you very much, Nicole. You're a great sport. I really appreciate you getting into that with me.
Thank you very much, Paul.
Well, that's it for this week on Digging Deep. Join us next week. This is Paul Harris, and this is Kitco Mining.